Big changes in the mortgage market this week, and if you've been waiting for the right time to buy or refinance, this could be the start of your window. The July jobs report, it shocked to the markets last Friday. Job growth stalled, unemployment ticked up, and mortgage rates, they dropped to their lowest levels of the year. So I'm going to break all these down, what happened, why the Fed is now likely to cut rates in September, and what this means for buyers and homeowners. So let's take a look. Let's go to the vibe board and go through some of these numbers here. So the BLS report, it came out, it showed just 73,000 jobs reported, well below the estimates that they were thinking. And the unemployment rate jumped from 4.1% to 4.2%. Almost, because of a rounding issue, it almost hit 4.3%. So it could have well easily been 4.3%. So that was big numbers. But what really shocked the market was the jobs revisions for the previous 2 months. 258,000 jobs were taken out of the numbers. They reduced the number of jobs that were created that they initially reported down by 258,000 jobs. That is a huge revision. So May went from 139,000 jobs were created to 19,000 jobs. So a huge revision down. June went from 147,000 down to 14,000 jobs. So these were big job revisions. Now, Trump fired the BLS, the commissioner there. And again, how he went about it, maybe not the right way. But at the end of the day, what I don't like and what we've been talking about for some time is that the numbers are always being revised and they're big revisions. So can you imagine if the numbers came out that showed these revisions initially, the market would have reacted a lot differently. Mortgage rates would probably be lower as a result right now. The Fed may have made different decisions as a result of those numbers as well. So a lot of things are impacted based on these numbers, and there's, we got to get these numbers correct. So also, Fed governor, the one resigned, Kugler, she resigned this week, and that gave Trump room to appoint a new Fed governor. So he's done that. It's a temporary thing until January, and then until that seat opens up again. But this is something that is helpful for Trump in making, kind of getting the Fed to kind of go towards lowering interest rates. So I think that for interest rate wise, that is a good thing. Mortgage rates did drop. So this is the first time, this is as low as 6.5% here. So I actually have some jumbo rates that are a little bit lower than that. But at the end of the day, the jobs reports, that was a catalyst for the bond market, excuse me, to lower the Fed funds rate and the bond market to rally and have lower mortgage rates. So I do think that the bond market is now going to get ahead of the Fed over the next couple of months here and really drive the interest rates down further. So I'm not going to go through this, but inventory keeps on going up. The home growth is kind of really slowing at this point in time because the inventory is going up, and that's keeping home prices kind of down here, so they're not going up as fast. I'm not going to go into all of this this information here, but if you want, you can call me on it. We can go through some of those things. But inventory, again, going up. What I do want to talk about is the Fed and kind of their dropping the Fed funds rate. So with all that's gone on, there's a good chance now for 1 to 2 to 2 to 3 rate cuts before the end of the year. So we could see 75 basis points drop, or 50 to 75 is kind of where the numbers are. But there's a 93% probability that they are going to drop by another 0.25%. So let's take a look at the Fed watch here, and we'll show you this. So this, I've showed you this before, but this is 4.25 to 4.5. This is where we are. This is where we are today. as far as rates, 4.25%. So now this is what we're talking about is the September meeting. The September meeting, there's a 91% chance now that we are going to see a 0.25% drop down to the 4% number for the Fed funds rate. Now, this does not mean that mortgage rates are going to go down by a 0.25% in rate, but this is again a driver that is going to drive the bond market to lower, to get prices higher, lower the yield on the 10-year Treasury, and that will drive mortgage rates down. So at the end of the day, there's now a 91% chance based on these numbers here of the Fed lowering the Fed funds rate. Now, if we go to October, this is the 4% here. So there's a 38% that they're going to keep them there, and a 58% chance that they're going to lower them another quarter to 3.75. So this is really, we're starting to get to a point where we're driving the rates down, and then this is December going down another to 350. So these are some big movements here, and we may see them even go further. Like the initial cut, maybe 50 basis points. So we may see that based on these numbers. So where are mortgage rates? Well, right around 6.5%. They started to, they came down earlier in the week, and they've started to bump back up just a little bit towards basically the end of the week here. And I'll show you here the bond market. Basically this morning, right now, we are down 8 basis points. So remember, the lower the prices, the higher the interest rates. So the yield, it's dropped, or it went up a little bit as of today. We were down to 4. We got down to kind of this 420 number right here, and from there we've jumped up a little bit. So you can see we're right in between these two Fibonacci levels here that we have. And so hopefully today we'll see it bounce back down a little bit, but there's not much numbers that are going to come out today that are going to drive the market at all. So at the end of the day, the good thing is that we do have lower mortgage rates right now than we have, and it can be a catalyst. I think that this may be the move here to really drive interest rates down and help you out. So the Fed lowering the Fed funds rate will help you for sure with line of credits on your house, car rates, credit cards will come down. All those things will have a big impact on you as the consumer. And then from the government perspective, they can refinance some of their other debt that they have in other bonds so that they can lower their interest costs on the federal debt. So anyways, lots to talk about here. If you have any questions about it, please feel free to give me a call. Would love to talk to you. Have a great weekend. I will be available all weekend to answer any calls, any texts. Otherwise, I will see you next week, and have a great weekend.